Good morning and welcome to Purpose Driven Finances, where our focus is helping you use your finances to achieve the purpose and plan for your life. And now here's the host of Purpose Driven Finances, Alan Molina with Serwus Capital Management.
Hey, good morning. This is Alan Molina, your host, Purpose Driven Finances, president of Serwus Capital Management. How are you doing this glorious day? What a day. It's August, enjoying the heat is kind of calmed down. At least my neck of the woods, we've had some water, through the rain clouds.
Yeah.
And it's been a great time. Hello, Mary. How are you doing?
I'm doing great, Alan. I hope you are too.
Yeah, we went to a great wedding up in Lancaster. And I'm not going to discuss it on air, but some of the towns up there are named rather interesting names around Lancaster.
Like what?
I'm not going to say.
Oh, you're not going to share it?
No.
Okay. Would it be inappropriate?
Some of my friends would be like, Alan, what are you talking about that? So.
The only one I can think of up there, it's Wilkes-Barre, but people say bar because it's spelled bar, but it's pronounced Wilkes-Barre, and that always drives my husband crazy.
Just go look at a map and look around there.
The kind of names that make, if you have little kids in the car, they're going to laugh.
Well, I don't know. I don't know. They'll be like, Mom, Dad, what does that mean?
Yeah, okay.
And
Some awkward conversations.
Yes. And we don't, and so, that being said, it was great. Some of the guys I mentored and continue to do that. It was their wedding, or not their, he and his new wife. It was a great time and some family time. Bought a new swing for the house. And so it was a great time. We went to, you ever been to Berkeley Springs, West Virginia?
I don't think I have.
It's basically, I would call it the poor man's homestead.
Okay.
It's
Nice.
about the cost of a Hampton Inn, but it's a little bit more upscale.
Right.
They want a dress code, but it's a lot smaller. And George Washington in Berkeley Springs actually owned some land, and Berkeley Springs is, Hot Springs.
Yeah.
And Warm Springs. Well, they have some springs, and I dare to say it's similar water, but the town is really built around it, so it was pretty cool. And we enjoyed it.
Did you do the springs?
No,
Okay.
we got some water from it.
Okay.
And it's more, I like the homestead, but it's not as child-friendly. At least I don't think so.
Mm-hmm. Yeah.
Because, they're supposed to be quiet and not run. And
Yeah.
I mean, it's changed a little bit over the years. But Berkeley Springs, the kids can go play in the springs, and it's just enjoyable.
Nice.
And it was great food. But folks, we're sitting here. We're going to talk about. Still talking about portfolio management, and the title of the show is "When Should You Change Your Portfolio, and When Should You Do Nothing?" And so, really looking at the check, and we're going to have a theme throughout the entire show: the check engine light on your vehicles. And what's funny is right now, the check engine light is on my Jeep. It has 200 and I think 38,000 miles on it. And it needs 4 oxygen sensors, and it's running fine. At least I think so.
Okay.
The miles per gallon have dropped, but I know what's going on, and I probably need to change them. My goal is to get a new car for me down the road, and then take the Jeep and just get a new engine and things such as that, and let that be. It's going to be my quad 3 and 4 car.
Right. So you're comparing it. So it's like warning signs, like the warning lights, the check engine lights. So, and it's not just cars. We have those kinds of warning signs throughout our everyday life.
Right. Exactly. Like, you ever gotten out of the bed, Mary, and you're like, what in the world? I felt like I just got hit by a truck or ran a marathon, and all you did is play with the kids.
That's starting to be more and more every day.
Right.
You don't even know why. That's the scary thing.
Right.
So, all right, I'm going to run down a list of some warnings, and you give your first reaction, okay?
Okay.
All right, low fuel light.
Low fuel light. It depends on how low it is. Can I make it? Some people are like, I can go on fumes, but I have that on the Jeep regularly. Actually, it's going to be on probably the next 10 miles, and I just want to make sure I can get to the what's that place called? The gas station.
Yeah, the gas station. You don't ever try to see how low you can go.
I try not to, because that's an inconvenient situation.
You already shared this one, the check engine light.
The check engine light. What's amazing is my wife, she drives an Infiniti QX60. We got it on off a lease, and it's a pain in the tail. I can't stand that car. And what ends up happening is the check engine light comes on, and I generally know what it is. But often, it's interesting how often the check engine light with these new, when I say new, the past 3-4 years, check engine light comes on for just about everything. Like on my Jeep, it'll come on for gas tank, the gas cap being loose. But my check engine light, it's a little bit more serious, so you really got to go check it out.
How about a tire pressure warning?
Tire pressure. It's normally with these modern cars, you have the number, the pressure. If it is consistently going down, then if it's in the teens, you need to, it can be a significant warning. But you just got to learn it, and it just depends.
What if you get one of the weather alerts, like it's on your phone or maybe you hear it on the radio? It's like, the National Weather Service. What do you do about those?
Well, usually they're pretty serious. The government isn't that bad. They've improved a little bit about, what do you call it, alerting us. But generally, if those go off, it's a significant issue.
Here's one that I think is alarming is when the smoke detector. Well, when it's chirping. It's one thing. There's a difference between going off and then just chirping.
Right.
Say it's at 2 a.m.
That's when you bring out a baseball bat.
So you've been at my house. You know my husband.
Well,
yeah.
I mean, I changed all of my smoke detectors because I was kind of tired of that. And the thing I couldn't stand about the smoke detectors is after 10 years, they die. I'm like, bro, I've been in houses, my family had one smoke detector was like from 1973 and it still worked. And so it is very annoying. And changing the batteries can be a pain, especially if you're short or if you have tall ceilings. In some places, my ceilings are 10 feet. And it's annoying because you got to go get but the issue is the alternative. And even though that's a pain in the tail, it's very important.
Right. And the question is how quickly do you have to react to it? You've got to take care. So these are all warning signs, but do they all require the same kind of reaction?
Right. And they don't, obviously, because if your low fuel light on and the miles per hour, not the miles per hour, but miles per gallon, not miles per gallon, the amount of gallons, come on, Alan, the amount of estimated miles that you have left, if it's in the 40s and your gas station's 10 miles away, it's not a concern. But if you're in the Mojave Desert and it's saying gas, and that can be a world of hurt. And so it's really, what is the context of these alerts? And what are the ramifications if you don't listen to them? As an example, the smoke detector chirping. What happens if you just take the battery out and don't replace it? You're like, I don't have any left, I need to sleep. And you wake up and you forget about the battery, and then something really happens. That's not a good day, because sadly we were traveling to Charlottesville, my wife and I, probably a year ago, and we were first on scene. There was a trailer, a single wide trailer. Mm-hmm. I knew it was the kitchen side because it had the stovepipe. It was engulfed, and we were on site, first on site. And we got the neighbors, we called 911, and you could hear the smoke alarm going off. And that was an alert for the person. But if you don't have those, it can be an issue, especially sleeping. Like, I hope I'm not taking too much of my time. I'm bad with timing. I'll give you an example. My middle son was spending the night at some friend's house at the lake, a glorious home. We're on the water, beautiful large home. Everybody had their separate bedrooms. But the CO2 alarm was going off, and it was middle of the night. And what do you normally do if it's the middle of the night? Oh, I don't care.
Yeah.
Well, the person, the young adult who lived there, knew it. And it was something was leaking. And I think, is it CO2?
Carbon monoxide.
Carbon monoxide.
Yeah.
That's not CO2.
Yeah, monoxide, not dioxide.
Yeah. And basically they said that the fire department came and they said that some people near there were probably 20 minutes away from dying.
Wow.
And so you're exactly right, Mary. All of those warning lights can be an issue, but if you ignore them, it's normally not a very good thing for you to do.
Yeah.
So if the low fuel light comes on, you don't pull over. You don't stop and go, oh, I'm just going to run it. What ends up happening is, let me turn the tables a little bit, Mary.
Okay.
If the check engine light flashes instead of staying solid, would you treat it differently?
Yes, and we have before. The check engine light comes on a lot.
Right.
And a lot of times it's just for nothing,
right.
like you were saying. But there has been one time where we had just been at it was with the whole family. We had stopped for some reason. We pull out again, and it is not only flashing, but it is beeping at us. It was like, pay attention to
right.
me. And we looked in the manual, and it says, this is a real emergency. You need to pull over right away, which we did. And it required immediate attention
right.
and pulling over. We couldn't drive anymore.
So that's smart. And
yeah.
It
was tough.
My new phrase for the day is pain in the tail. And it's highly inconvenient.
Mm-hmm.
What about if the tire pressure gauge, cold morning, it's October, a little bit or November, a little bit of frost, nothing major, and the tires are showing low. Do you freak out? Or do you what do you do?
I look at the tires, and if one of them is not just flat
right.
on the ground, I figure it could be caused by the cold weather. It could be some other things, and I'll check it out later.
Right, exactly.
Yeah. Mm-hmm.
I had the same thing when we were driving to Pennsylvania. The vehicle, all the tires were 29, and this one was 28, and it was saying, "Hey, low tire, giving me a warning." And as the tire warmed up, it went through there and. It was fine.
So it sounds like we're making a connection between these warning signs and investing. Like
exactly.
When you should be alarmed and when you don't have to be alarmed.
Exactly. Like yesterday, the markets were they were kind of flat a little bit. But one thing that happened is, like today, we're taping on Thursday, there's some asset classes that are declining. And is it worth changing? Is it worth looking at? Like there was a huge rally from last Friday to this Wednesday, significant. S&P back to all-time highs. But the issue there is it proof that risk has disappeared? Also, the scary headlines are not necessarily an instruction for your portfolio. As an example, if there is more missiles being launched in the Strait of Hormuz this weekend, because it seems like they're on the weekends, is it something to sell your portfolio on Monday and buy oil? My guess is probably not, because they're really trying to manage that. But the biggest thing is ignoring a meaningful change can turn into a manageable problem, into a larger loss. And that's what's really detrimental, because the months of June and July were basically what I would call is a non-trending downward market. Is you would have several days of up, several days of down, and it wasn't long enough to really accomplish much. And so the real question is, did the market move in your favor? Is there enough evidence to change in order to go a different direction or make a decision?
So you're not necessarily reacting faster. You're just trying to recognize which changes matter.
Exactly.
Well, then how does an everyday investor know the difference between the ordinary market noise and a real warning?
Right. That's a great question. Realistically, if you remember, I think it was last week we were talking about driving from Lynchburg to Florida.
Mm-hmm.
And, I shared that I almost had a wreck because I got distracted. What happens is when you're driving, even this is in Lynchburg, or if it's driving from Lynchburg to Florida, you're monitoring the road, traffic, weather, speed, mirrors, fuel, all the drivers around you, the motorcycles, the trucks. And sometimes you go through potholes, and just because you go through a pothole, you don't pull off the road, your car to the side of the road and check your tires. If you did that in Pennsylvania, you'd be doing that every 20 feet. If a bridge closed sign it will change the route. Good driving is not a constant turning. It is responding when the evidence demands it. You know, if there's a wreck ahead, like we were going through Berkeley Springs and leaving it, and the fire trucks passed us, and we were going down, and on the outskirts of the town, there was a wreck. What did that wreck require us? To reroute and go around and get back on our journey. And so portfolio management, it's the exact same, works the same way.
So I know we have to take a break.
Yeah.
But when we come back, can you walk us through what you're looking at?
Yes.
Before you decide whether somebody should hold steady, add, reduce, sell, or move to cash.
Exactly. I look forward to it. So folks, give me a call, 434-316-0246. Catch you on the flip side.
Hi, everyone. Brian Kilmeade here. Coming up on the next edition of the Brian Kilmeade Show, we'll have the biggest newsmakers, news breakers, and take a deep dive into news you care about. Whether it's breaking news, entertainment, politics, or sports, even pop culture, I'll bring you the latest developments with expert analysis from the big names you know and love. Plus, you never know who may stop by. That's all coming up on the next edition of the Brian Kilmeade Show.
Weekday mornings from 9 to noon on WLNI. And now, back to Purpose-Driven Finances. Here's Alan Molina with Serwus Capital Management.
Hey, good morning again. Alan Molina, your host, Purpose-Driven Finances, president of Serwus Capital Management. We're talking warning signs, and more specifically, when should you change your portfolio and when should you do nothing? That is a great question. And one thing that's interesting about this topic is there are so many schools of thought. I mean, it's amazing. And there's so many different kinds of ways to manage your money. Also, on social media, there's all of these gurus who say this amount, that amount, and it's usually high double-digit returns. And even when I was on X, I'm still on X, but when I was on X and some guy contacted me and said, Alan, we don't guarantee it, but we have extremely high batting average and do extremely well. And I was like, okay, great. Appreciate that. And we want you to follow us and manage the money. I'm like, okay, what's the payment? He was like 10% of your earnings. And I was like, are you registered? Or, how does this work? And so just because it sounds great doesn't mean it is. But also we're really talking about changing your portfolio. And so what I'm trying to do is express how Serwus Capital Management does it in a way that is actually beneficial, not emotionally driven. Does that make sense, Mary?
It does. So what is the first thing you do before touching an investment?
Right. Before I do anything, one thing that I often do is activity is not the goal. The past month or 2 months has been rather frustrating because you go 2 or 3 days and then it switches. That's been rather frustrating. But realistically, the first thing I do is I want to know, is the economic growth strengthening or weakening? Is inflation rising or falling? Then I look at interest rates and liquidity. Another area that I look at is volatility. Because if the stock market is going up and volatility is going up, there's many different ways. Easiest way is looking at the VIX, or I think the 7-day VIX, is if the market is going up and volatility is going up, the volatility is like basically a fear index, then that's a concern. I mean, there's so many warning lights and signals and things like that. But realistically, different environments reward and punish different investments. Like in the past week, retail sentiment investments have done extremely well. But if you look at AI and a lot of computer hardware, they've had a tough row to hoe the past 2 months. But software has done a lot better. And so it just depends on the economic environment and what's happening around the world. And you don't change your portfolio because of one headline. However, certain headlines carry much greater weight than others. As an example, this past weekend, Bassett, who was Secretary of the Treasury, I believe, he wrote on his notes to do 5 to 10 billion of yen purchases or something. And you saw the dollar weaken and the yen get stronger because they don't want the Japanese government, who has about $1.1 trillion of U.S. government bonds, to start selling them because that would cause a lot of problems. And so that is one headline that's worth watching, not how many missiles we have or don't have or things like that. Does that make sense?
It does. And you mentioned the volatility. That's the economics. What you were talking about is the economic story. What about the actual market itself?
Yeah, well, in the market itself, what we need to do is respect behavior. Now, one thing that is important is I have a friend who we met with, he's a client, and, praying for him, and he's going through a tough row right now. But he has a friend who said, hey, I listen to Alan every day, and hey, I'm not going to say your name, but you know who you are. I appreciate you listening. Thank you. I really do want to meet you. And I've probably met you, but I'm bad with names. But if you are happy with the ups and downs of the market and happy with 7 or 8% just churning it out over historical averages, that's all you want, that's fine. But what happens is when you have a goal of, my goal is to beat the S&P 500 by 5% a year, which is, you ever heard of a BHAG? Big, hairy, audacious goal?
Yes, I have heard of a BHAG.
Dr. Falwell talked about it, but before that, there was a book, and I can't remember the name of the book, but that's where it really comes from. And so what happens is respect market behavior if your goal is to outperform and not only have lower risk. It just depends on what your goals are. Looking at price, is it the investment advancing or deteriorating? Volume. Are people buying it? Are they selling it? You can get really in depth. Volatility. Is it moving orderly or is risk expanding? Like yesterday, which was Wednesday of this week, and I think today's date is the 6th. So on the 5th of August, at one point the markets were up and volatility was up. End of the day, that wasn't the case, but it was a warning sign. And so then leadership. Is capital moving towards this area or that area? As an example, quad 1, that's generally Goldilocks. That's personal discretionary. That is, some technology does well. As a quad 3, gold, crypto does very well. One thing that's really changed is bonds, what they do and how they do it. Then, finally, the economy provides the context. Market behavior provides the confirmation. What I mean by that is if you see in the economy of something happening, what will happen is if you're right or wrong, the market will validate your process. To give you an example, I pay for research, a tremendous amount of research, and the company I buy the research for. And the reason I don't share it is I'm not here to give free bread to everybody. It's just what it is. But they are probably the most accurate on GDP and inflation I've ever seen on the street. And they don't, Mary, I don't expect you to know this, but every month they come out with inflation of the previous month. What's interesting is most firms come out with their official number 2 to 3 days before the number. The company that I follow, they're usually sometimes 30, 45 days before the number comes out. And they are accurate to basis points, very close. And the trajectory, I think in the high 80s, low 90s% of accuracy. And so that being said, you have to make sure you have good information, because if you don't have great information, it can cause issues.
So once you understand the environment and you understand the market, what do you ask about the portfolio itself?
Right. And so what I do is when you look at the portfolio, First of all, what is the goal? What is the goal of the person? But then what is the goal of the portfolio that you're being managed? You know, I have a client, smart guy, very successful in business. He enjoys individual stocks, and I've mentioned him several times. Well, he has 3 different portfolios. He has individual stocks. He has some QPM. He has some mutual funds that we just trade as the economy changes. So realistically, how the portfolio is managed is the ultimate purpose that you have for it. And that way you get to determine. Now, you know, I would expect that you know a whole lot more about radio than I do, Mary.
I hope so.
I hope so.
Yeah. Mm-hmm.
And so I hope I know a little bit more about what I do than you do.
Yeah, I'm certain you do.
Did you know that there's actually portfolio managers that have tied their office locations next to, when I say tied, built, next to the exchanges? That way they get the quotes milliseconds quicker than everybody else.
Milliseconds.
Mm-hmm.
Wow.
And so what they will do is they will trade stocks or whatever in milliseconds, not hours, not minutes, not days, not weeks, but milliseconds. And it's called high frequency trading. And I think many years ago, I talked to Rich about it on the show. I think it should be banned, but it is what it is. And so realistically, what is the goal and the purpose of the portfolio? And then that really changes what rules and what the activity is and what the goals are. What's the next question, Mary?
How do you? I know you pride yourself on taking the emotion out of it, but how do you do that without being? How do you do all this without being emotional or subjective?
It's hard. I've had to go through, I would classify it as SEAL training to take the emotion out of it. It's extremely hard. And even this week, I have been frustrated because I'm trying to find the edge. And at times, it's not there. And so what you basically have to do is make the best decision with the best information you have right now and make sure that your worth, and I'm not talking about your net worth, I'm talking about your physical, spiritual, who you are is not tied to your money. And then make sure you just follow the plan. If you're happy with it going up and down and we just want 7-8% over 20 years, every year, it doesn't matter. But if your goal is to outperform on a quarterly basis, then you have to be very proactive and you just have to set it aside. So folks, we have a little bit of time left. I hope you have a great weekend. Give me a call at 434-316-0246. Go to my website, servuscm.com. Hope you give me a call and have a great weekend.
Returns for illustrative purpose. This is not a suggestion to buy, sell, or use a platform. Only will a suggestion occur after a meeting to determine goals, risk tolerance, and time horizons. Investments involve risks and no guarantee of future results.